After being in a bear market for a few months now, a lot of retail investors are sort of flocking to safer investments like bonds and high-paying dividend stocks or ETFs, which makes sense in times like this, but are dividend-paying stocks always a safe, no-brainer investment? Well, today let's talk about 3 of the highest paying dividend stocks on the market right now, with one of them paying well over 100% in dividends. And that's not an exaggeration, each of these 3 stocks pay over 30% in dividends right now. But most of us who have been investing in the stock market for quite some time now know that when something seems too good to be true, it usually is. So today I wanted to talk about whether or not it's worth investing in any of these 3 stocks despite the massive dividends that they pay. So the first one is Petrobras, or PBR, which is a Brazilian-based gas and oil company located right in the heart of Rio de Janeiro, Brazil. It's one of the largest producers of oil and gas in the world and has been around for about 50 years. PBR has a market cap of $87.7 billion, a PE ratio of about 2.83, and as of when this video was published, it's currently paying a dividend of just over 50%. So this year, especially because of the huge spike in oil prices, PBR has produced record levels of free cash flow, and a percentage of that operating free cash flow gets paid out to the shareholders in the form of dividends. So if you notice, PBR stock price has been kind of up and down this year like crazy, pretty volatile, but the dividend has just been slowly increasing as the profits have just been through the roof this year. But even though the dividend payouts are extremely high right now, PBR does have a variable dividend policy, which means that they can pretty much change the dividend at any given time. So even though the dividend right now is 50%, in a couple months from now it could be 5% or 10%, really just depending on what the company wants to do. And since the Brazilian government has a huge stake in the company, it's about a 29% stake, depending on the policies that they make, they can also choose what the dividend does as well. So when it comes to investing in this stock, you do need to be pretty careful about not getting caught in the dividend trap. The next one is a shipping company called SBLK, or SBLK. This company is located in Athens, Greece, and specializes in the shipping and transportation of dry bulk cargo. SBLK currently has a market cap of 1.8 billion with a PE ratio of 2.02 and is paying a dividend currently right around 37%. So I've been following the stock price fairly closely this year, and it looks like it peaked around $32 in May, and since then it's just been diving right back down. So right now it's around $17 per share. So very similar to PBR, SBLK's profits have just been skyrocketing this year to record high numbers, which means business is good and also explains why the dividend payouts are so high. But with the dividend being so high, it also means that the volatility has been extremely high for this stock as well, which might not be attractive if you're wanting a stock and an investment that's more risk averse. But the good news with this stock is every single quarter since 2008, it has been consistent with dividend payouts. So if you do own the stock, you can count on getting paid every single quarter. So this last one has been crazy popular this year, probably because of how high the dividend payouts are right now. It's Zim Integrated Shipping, or ZIM. ZIM is another shipping container company located in Haifa, Israel, and it's a pretty young stock as well. It's only been listed on the NYSE for about 18 months, and right now it's mostly known for its 117% dividend. ZIM also pays its dividend based off of the variable dividend policy that it has, which means as prices come down, as profits fall, especially with shipping rates coming down, the dividend might drop as well, forcing you into that dividend trap, just like I mentioned with the previous 2 stocks. I'm not saying that it's impossible to make money with these 3 stocks. In fact, I own all 3 of them, and as you can see, I don't own too many shares of each. So for the next 6 months or a year from now, I'm really just gonna hold on to these 3 and see if it's worth it to invest into stocks like this long term. But I would bet, like I said, they might just be a little too good to be true. But let me know in the comments below what you guys think of these 3 ultra high paying dividend stocks, and I will catch you later. See ya.